When should you start topping up your CPF? Great question, you may ask, because this is a highly debatable topic. And I believe that whatever I say in today's video will attract a lot of criticism, whether you are for CPF or anti-CPF. But I have to put my point across, this is really for my own situation, so it's not financial advice. And my example may not be the best example, because back then CPF rules for top-up were a bit different compared to what we had now. But to give you a background and a context of my situation, I started topping up CPF at the age of 25. At the age of 25, that was in 2016, where I finished my first year of employment. So on my second year of employment, I started to look for avenues to reduce taxes. So that was that very simplistic thought that spurred that topping up CPF strategy, right? Nothing about all this ikigai and financial independence stuff. All these are more developed in like my late 20s, which were the later part of the years. But the point of today's video is I will share each different scenario where I feel that topping up your CPF is the most optimum strategy, and then maybe some of you can consider it if you're on the fence on whether you should start topping up your CPF. Now, topping up your CPF, not necessarily you have to do full scale up to the full retirement sum on your first year. I'm not telling you to do that. I'm just saying that when you're thinking of starting to top up, maybe you can do some baby steps, right? I know we all start somewhere, okay? You don't straight away top up 198,000 to hit the FRS, which is this year's 2023 number. So it's really from an optimizing standpoint. I'm not asking all of you to go and top up to the full retirement sum straight away. I'm just giving you all some starting point. And I do know that each of you, your personal situation may differ quite a bit. So if you want to have like a general comment on how to do for your own CPF, maybe you can go and join my Telegram group. There are a few CPF experts out there other than credit card experts on hacking, right? Just ask your question there, and those who can help, they will help your situation if they could. So join my Telegram group at HoneyMoneySG. Now, the first situation where you should start topping up your CPF is when your combined CPF balances are below $60,000. Because you heard of me saying that $60,000 is the magic CPF number, right? What do I mean by magic CPF number? Is when up to 60,000 of combined CPF balances, it will attract 1% additional interest on your first $60,000 if you are below the age of 65. So it's like free money 1% on your first 60k. Do take note that there is a cap on the OA for this calculation. So the max cap for OA in this case is only 20,000. Above 20,000 OA won't be considered. To be super clear, let's say you have 30,000 of ordinary account funds OA and you have 5k of SA and 5k in MA. Total combined balance 40k, right? But you won't get the max optimized 1% because you see 20k is the max that you can take from the OA for additional interest calculation. So your effective interest is only calculated on 20k OA plus 5k SA plus 5k MA, which is 30k, which will get that 1% additional interest. So that 10k in OA is wasted. So how to optimize this is that you can transfer 10k from your OA to your SA. So your OA becomes 20k, right? Then your SA becomes 15k, your MA becomes 5k. In this case, your full 40k will be considered for that 1% additional interest, which is like $400. Pretty sweet, right? Now, on the other hand, what if you have $0 in your OA? Now, don't worry, because OA is not a requirement. You could have up to 60,000 in your SA or 60,000 in your MA. It doesn't matter. 60,000 in either of the SA and MA will still get that 1% additional interest. So you can heck care OA at all. So using my very extreme example, let's say you have $0 in OA, 35k in SA, and 5k in MA. All your 40k will still get that 1% additional interest, so you don't have to worry about it. Effectively, 1% of your $60,000 of combined balance will net you $600, which I think is pretty good, right? But how about those who are age 55 and above? Then you know that they have this thing called retirement account, which is created at age 55. Now, one more benefit is that when you are 55 and above, then you see your first 60k have something different, because your first 30,000 will attract 2% additional interest, okay? And then your next 30,000 will attract the same 1% additional interest. So if you're looking at a combined factor, your first 60k will attract a net effective interest rate of additionally 1.5%, because 30k 2%, 30k 1% combined, first 60k get 1.5% additionally, which means 1.5% multiplied by 60,000, that is $900 of additional interest, which is a super low hanging fruit. But you know what is another low hanging fruit? That is the message from my sponsor. I've never seen any company throw away free money like that. Weebu, are you serious? From now till 15 March 2023, you mean I could just deposit any amount and I could win up to $500 of free stocks? Oh yeah, bo, my house leh. But it's really true because some of my community Telegram members have already won stocks from companies like Apple, Tesla, and if you are even lucky enough, you could get like Google and Amazon stocks. You just have to sign up for a Weebu account and deposit like $1 and you can get 5 lucky spins in total to get up to $500 stocks. That's it, man. So simple. Deposit $1 and you got the chance to win $500. I mean, that's like literally free money. If you still don't want to take action, I also don't know what to say. So do use my referral link down below or scan the QR code right here to apply for your Weebu account before the promo ends on 15 March. So that was the first scenario. If you have combined CPF balances below 60k, then you may want to consider topping up your CPF up till $60,000 first. Now, the second scenario is when you need to start paying for your own integrated shield plan. And for those people who do not have integrated shield plan, or we call it ISP, right? I think you are putting a very big risk on yourself because the ISP will help you defray majority of the hospitalization and the surgical costs. We all know that Singapore medical cost is really expensive and you don't want to expose yourself to such risk. So it's good that if your parents has bought it for you, but you do know that when you start working, you are expected to pay for them yourself, right? You can't expect your parents to pay for your insurance premiums forever. And for those who do not have it, maybe when you start working, you can start to afford. So if you're familiar with hospitalization wards, you don't even have to go to the highest tier, which is a private ward, right? Because you can start with like B1 class or A class. I think these are much more affordable plans compared to the private hospital bed class. So if you do not have that much money, that's fine. You can go for B1 or A first, because having this kind of integrated shield plan coverage is better than none. Don't rely fully on your MediShield Life. It's not going to help too much. Now, bear in mind, I'm not an insurance agent, so I'm not here to charge you commission for selling my insurance or something. But you see, the thing is, how does it link it to CPF top-ups? Because you do realize that your integrated shield plan premiums can be paid by MediSave, okay? And that is the MediSave in your CPF account. So assuming you are a male fresh grad, okay, age 25, you just started working and you need to start paying for your own premiums. Let's say your age next birthday is 25. So if you look at this premium table given by Great Eastern Shield Plan, then the premium is around $337 per annum. And if you want to pay out of pocket using your cash, it's quite painful, right? You are a fresh grad, you pay $300 over annually for this insurance. Okay, let's say if you have sufficient interest coming from your MediSave account annually at 4%, it's enough to cover it. How much MediSave do you need? We just do a very simple math calculation. 337 divided by 4%, you'll get around $8,425 in your MediSave account, which will net you 4% interest. That is enough to pay the insurance premium. So you see, once you have this 8,400 amount in your MediSave, you don't have to worry because the interest will cover the insurance premium. There's no cash needed for you to pay for it. So it's sort of like free, but I won't say it's free. It's just subsidized from the interest given by the CPF board. And that is the main reason why when you're topping up to CPF, I always suggest that you all start with the voluntary contribution to MediSave account. Okay, you all just have to top up 8k every year. Not only it helps you reduce tax relief, but it can help you pay for your integrated shield plan premiums as well, especially in this fresh grad example. Then you add on some mandatory contributions from both your employer and employee. Very sure you'll hit the 8,400 number easily in your first year of working. Now, the third scenario where you should start topping up CPF is when your tax accessible income has reached at least $40,000. Now, why $40,000 is because that is when your income tax bracket will be at 7%. So tax accessible income is the income level that you will receive after you have deducted all those tax reliefs, tax deduction from your gross annual salary. So that is after all those things deducted, which means if you are so far out from 40k, maybe you want to top up your CPF to reduce it to as close as 40k. Reason is because at 7% income tax bracket, it starts to become quite significant for your tax expense. So you will need to start employing tax strategies to help you reduce your tax expense, and one of it is to top up your CPF. But of course, I can hear some of you through the screen already. 7% is so little. I only want to top up CPF when I'm 11.5% or even 15%. That is fine, right? To everyone, there is a different number that they can accept. For myself, I did it at 7%. For you, maybe you want 11.5%. But you have to remember one thing. Not everyone will actually hit that 120,000 per annum of income. Because at that 120,000 annual income level, you're probably at managerial level. managing others, or you're in a high income industry, which I can honestly say that not a lot of people will make it to that level, because most people will stagnate at around 80,000 to 100,000 annual income, and that is considered above average income already if you compare it to the median income of Singapore. So you have to decide for your own personal situation. If you're good at climbing corporate ladder, maybe you can wait a while, but nothing is guaranteed in this world, right? And that is why even if you're doing at a 7% income tax bracket, that 7% multiplied by the 8,000 of VCMA that you could do, that is already $560 of net tax savings. Then if you add that 4% of interest on the $8,000 that you contributed to your MediSave, that is $320 of CPF interest that you will enjoy every year. So you see your total net profits is $560 of tax savings at $320 of CPF interest, which gives you $880 of total net benefits. What? Of course, this is just a very simplified calculation for you all to understand better. I know behind the scene there is so much more considerations that you have to think about. Ultimately, the decision to top up CPF is really your own. I can't really decide for you, but I hope that these examples that I've shared, these scenarios that I've shared, have helped you make a better decision for yourself, especially if you have self-doubted yourself, because I did so many years after that. But don't top up to the wrong account. Start with VCMA, voluntary contribution to MediSave account first. That is my preferred route. And if you are unsure, you want someone to guide you, then I have a step-by-step process where I went through in my earlier CPF FRS video, because I will show you how to top up your VCMA step by step.